Welcome to the Nifty Noon podcast.
Great to be here.
Today, we're diving straight into the pretty wild world of cryptocurrency and NFTs, pulling insights directly from our recent newsletter editions. We're looking at roughly May 12th through to May 16th, 2025.
And it's been a really fascinating period, hasn't it? Because you see these signals that almost seem to contradict each other.
Exactly. Like Bitcoin's price kind of stumbled, even though the regular stock market was doing pretty well off some positive news.
Right. And at the same time, you've got this ongoing, very determined push behind the scenes for stablecoin laws.
Yeah, lots happening under the surface. So that's our mission for this deep dive. Let's try and unpack these mixed signals, spot the key trends, and figure out what it all might actually mean for you.
Sounds good. Where should we start? Bitcoin's price.
Let's do it. Bitcoin's price action was, a bit confusing. On May 12th, we saw it dip below $102,000.
Mm-hmm. And that was right after hitting a 3-month high, wasn't it? $105,720 or so.
Spot on. But what's really interesting is, like I said, the stock market was actually climbing then, boosted by that U.S.-China tariff truce news.
Yeah, it does seem a bit backwards on the surface, doesn't it? In our newsletter, we kind of flagged a few things that might have been going on. Profit-taking seems like a big one.
Ah, okay. After that big run-up.
Exactly. I mean, it had gained something like, 24% over the month?
Mm-hmm.
After a run like that, it's pretty natural for folks to lock in some gains.
Yeah, 24%, that makes sense. Ride the wave, take some profit. Simple as that sometimes. But weren't there also some jitters about, who holds all the Bitcoin?
Yes, that's definitely another piece of the puzzle. This concentration of holdings, you've got Strategy, you've got BlackRock. They keep buying more and more.
How much do they hold now, roughly?
Together, it's around 6% of all Bitcoin. And, when just a few players hold that much, it makes some people nervous.
Because if they suddenly sell?
Exactly. It could potentially move the market quite a bit. It's like having a few dominant shareholders in a company. Their actions carry a lot of weight.
Okay, but here's the twist, right? Because even with that dip and those concentration worries, the underlying signals weren't all bad.
Not at all.
Our newsletter pointed out really strong inflows into the spot Bitcoin ETFs, like $2 billion just in early May.
That's a key point. Those inflows are huge.
Yeah.
It really shows that institutional appetite, it's still very much there.
So maybe they saw the dip as a buying opportunity.
Very likely. It suggests many bigger players are looking long-term and using these moments to add to their positions.
And it wasn't just a gentle dip, was it? May 12th saw that massive liquidation event.
Oh, yeah. About $215 million liquidated across the crypto market in, just 60 minutes?
Crazy. That kind of rapid deleveraging, it always shakes things up, adds volatility.
For sure. It highlights just how much leverage is still in the system and how fast sentiment can flip. But importantly, that dip wasn't the end of the story for Bitcoin that week.
No, definitely not. By May 16th, as we covered in the follow-up newsletter, it had climbed back up to around $103,800.
Right. So that quick recovery, it does suggest there's a real underlying strength there, continued buying interest, sort of absorbing the selling pressure.
Maybe that initial dip was just a healthy correction after the big run-up, like we thought.
Quite possibly. Okay, so shifting gears a bit, let's talk stablecoin regulation. That's been heating up, especially with all the lobbying in D.C.
Yes, super important topic. Our May 15th newsletter went into this about 60 crypto executives, big names like Coinbase CEO Brian Armstrong heading to Washington.
All pushing for that, guiding and establishing National Innovation for U.S. Stablecoins Act.
The Genius Act rolls right off the tongue, doesn't it?
Yeah. It's memorable, I'll give it that. But seriously, this level of lobbying shows how much the industry wants clear rules for stablecoins. Armstrong was very vocal about needing clear rules for innovation to happen in the U.S.
But it hasn't been smooth sailing, has it? Our update mentioned the Genius Act actually failed an initial Senate vote on May 8th. What was the holdup?
Well, it seems the main issue boiled down to Democratic concerns about former President Trump's digital asset businesses.
Politics getting involved.
Pretty much. Reports suggested they withdrew support, wanting specific language to prevent him potentially benefiting financially from the bill.
Interesting. So even with some bipartisan agreement initially, these political factors kind of threw a wrench in the works, for now anyway.
Yeah, but the lobbying didn't stop. They were hoping for another vote, maybe even on May 15th. It just really highlights how tangled crypto regulation is with everything else happening politically.
Absolutely. And the fact that so many CEOs made the trip really underlines how critical they think this is, for the U.S. staying competitive in crypto and for the dollar's role, too.
Definitely. Okay, let's pivot to institutional investment, because that also gives us a mixed view of things.
Totally mixed. On one side, you've got strategy just relentlessly buying Bitcoin. Our May 13th newsletter noted they bought another 13,390 BTC.
For about $1.34 billion, right? That was their 12th purchase this year alone.
12th. And it makes up something like 77% of their company's net Bitcoin buying in 2025. That's commitment.
It's a very strong signal of their conviction in Bitcoin as a long-term treasury asset. But, and it's a big but, we saw the opposite from the State of Wisconsin Investment Board, SWIB.
Yeah, that was a head-scratcher. Our May 16th update covered how SWIB completely dumped their BlackRock Bitcoin ETF holdings, IBIT, in Q1 2025.
All of it. How much was that worth?
Around $355.6 million. And what's really weird is they were early into these ETFs. They bought IBIT back in Q1 24 for $164 million and even added more after consolidating their Grayscale shares. Then suddenly, poof, all gone.
Wow, okay, that's a significant reversal. We don't know the exact why from the filings, but it definitely shows not all institutions are on the same page with Bitcoin.
Yeah, it's a good reminder that institutional adoption isn't just one single wave, it's choppy.
Very choppy. But then you flip the coin again and you see Abu Dhabi sovereign wealth fund, Mubadala, actually increasing its stake in that same BlackRock ETF, IBIT.
Right. Up to around $512 million. We noted that on the 16th, too. And IBIT itself keeps pulling in money. It's over $45 billion in net inflows now.
It really is a tale of different strategies, and Coinbase Institutional mentioned that sovereign wealth funds and others were buying Bitcoin back in April, maybe as an inflation hedge.
So while Wisconsin cashed out, maybe seeing it as just a trade, others are still accumulating for potentially longer-term reasons like inflation protection.
Seems plausible. It's definitely not a simple picture.
Okay, let's hit some of the other big company and project news from that week. Coinbase got added to the S&P 500.
Huge milestone. Stock jumped about 5% on that. Big validation for crypto overall.
Totally. And Robinhood is moving to buy WonderFi, a Canadian crypto platform. More consolidation happening.
Seems like it, expanding their reach. And did you see that NASDAQ-listed company, GD Culture Group?
The one planning to sell stock to buy Bitcoin.
Yeah, up to $300 million in shares, specifically to buy Bitcoin and other crypto. It's pretty bold for a non-crypto company.
Wow. Shows maybe a broader belief is growing that holding these assets could be smart, even for traditional businesses.
Could be. Now, shifting to NFTs. Big news for CryptoPunks.
Oh yeah, the IP transfer. Yuga Labs handed over the CryptoPunks IP to this new nonprofit, the Infinite Node Foundation, or NodeE.
Backed by a $25 million endowment, and importantly, the original creators, Matt Hall and John Watkinson, are involved on the advisory board.
What's the goal there? Liberating the punks.
That seems to be the idea. Get it out from under corporate control, make it more community-driven. They're planning exhibitions, even running an Ethereum node on site.
Interesting. A real commitment to preserving it. And the reported sale price was around $20 million. Gives you a sense of the value placed on that IP.
Definitely. Elsewhere, we saw BlackRock move forward with their Ethereum ETF filing, the ETHA one. They amended their S1.
Progress there, but not everywhere. The SEC delayed the decision on Grayscale's spot Solana ETF.
Right. Shows that the regulatory path isn't the same for all cryptos yet. Regulators seem more comfortable with Bitcoin and maybe Ethereum than, say, Solana ETFs at this stage.
Makes sense. Speaking of institutions, JP Morgan did something cool with tokenized treasuries, right?
Yeah, first public transaction of tokenized U.S. treasuries settled on the Ondo public ledger. Another step in bridging TradFi and blockchain.
Integrating those worlds.
Right.
And then MoonPay and MasterCard. That partnership sounds huge.
Potentially game-changing, enabling stablecoin payments at 150 million businesses. That could really boost everyday crypto use.
If that takes off.
Yeah.
Massive scale. And finally, some news for FTX creditors.
Yes, a second distribution announced. Over $5 billion going out on May 30th, 2025.
Good news for those affected, a step towards recovery there.
Absolutely. Okay, should we look closer at the NFT market highlights during that time?
Yeah, let's do it. We mentioned the Pumps IP, but the floor price did something interesting too on May 12th.
It did. Briefly flipped Bitcoin's floor, settled around 48 ETH, which was a known support level. And we saw some big individual punk sales too. One went for 148 ETH.
So even with the IP news, the market itself seemed pretty resilient for punks. Holding that 48 ETH floor is significant.
Suggests that core collector interest is still strong. We also track the daily movers, the winners and losers across different collections.
Always a roller coaster. We saw pops from collections like Bitcoin Puppets, Quantum Cats, Taproot Wizards at times.
And then dips from others like Node Monks or Pudgy Penguins on certain days. The volatility across the board in NFTs is still very real.
For sure. Reflects shifting sentiment, new trends popping up constantly. Oh, and that first 1 mega block on Bitcoin.
Right, including all the Wizards of Ferd inscriptions in the op return data. Kind of a cool technical feat, embedding all that data directly onto the Bitcoin chain.
Yeah, using that op return space. And for MEBITS holders, there were new wearables on OpenSea and a rewards program.
Adding some utility there.
Mm-hmm.
But on the flip side, those worries about Pudgy Penguins.
The potential liquidations because of loans on Blur.
Exactly. It highlights the risks, when you start using volatile NFTs as collateral in DeFi. Things can go south quickly.
A good cautionary tale. Okay, let's switch over to Solana. It was buzzing that week.
Definitely. Solana DX's decentralized exchanges hit a 3-month high in daily volume on May 12th. Like $9.8 billion.
$9.8 billion. Wow, that was nearly half of all DX trading everywhere, right?
Pretty much, yeah.
Yeah.
Just Solana's really become a major hub for DeFi trading. Although, interestingly, we saw stablecoins shift a bit.
How so?
USDT and USDC increased on Tron, but actually decreased on Solana in the 7 days leading up to May 13th.
Wonder why. Maybe people chasing yields elsewhere or just changing preferences?
Could be any number of things.
Yeah.
Also notable was that big 26-page report on tokenizing equities using Solana.
Exploring using Solana for real-world assets, basically, beyond just DeFi and NFTs.
Exactly. Shows the potential they're exploring for bridging traditional finance and the blockchain. It wasn't just TheoryLift using Hivemapper.
Which runs on Solana.
For map data. That's a real-world, mainstream company using the tech.
Great example. And Phantom Wallet added staked SOL, PSOL, and those cross-chain swaps, too.
Yeah, swaps between Sui, Base, Ethereum, Solana, making things more interoperable, easier for users.
All adding up. Solana's weekly DX volume hit a 9-week high around then, too, driving serious network revenue.
Yeah, about $25.9 million in weekly revenue as of May 13th. Solid performance.
Okay, let's wrap up with a few other bits and pieces that caught our eye. Frank DeGods stepping down as CEO of DeGods.
Always big news when a founder steps back in the NFT space. And politically, more Trump mentions.
His most important and impactful Truth Social post about drug prices and the China trade deal.
Yeah, those comments always generate buzz. Plus, that wallet, possibly linked to his World Liberty Group buying ETH and WBTC, sparked some chatter.
And VP JD Vance speaking at Bitcoin 2025, more political engagement.
Definitely a trend. On the tech side, Circle launched its payments network for USDC.
Building on that MasterCard news, really pushing USDC for payments.
And Optimism's Superchain turned on the Pectra Upgrade first L2 ecosystem to do so. Progress on Ethereum scaling.
WorldCoin launched their Orb Mini, the smaller scanner.
Continuing their unique identity project.
Yeah.
And then the arrest at Drifter Shoots.
Yeah, that was unexpected. The NYPD arresting him added a bit of drama.
Certainly did. A reminder that the real world and regulations can intersect sharply with the digital space.
Okay, so let's try and tie this all together. What's the big picture from this snapshot in mid-May?
Well, I think it really shows a crypto market grappling with some, like we said, contradictory forces. You had Bitcoin dip, despite good news elsewhere, showing its own internal market dynamics are powerful. Profit-taking, concentration concerns, those matter.
Right. And that massive push for stablecoin regulation, the Genius Act lobbying, it shows the industry is desperately seeking clarity, especially in the U.S. That feels like a major ongoing theme.
Absolutely crucial. And then the institutional story is just messy, isn't it? You can't paint it with one brush. Wisconsin sells millions in ETFs. Abu Dhabi buys millions. Strategy keeps stacking sats. It's not uniform adoption. It's different players making different bets.
So understanding these nuances, the mix of profit-taking, long-term belief, regulatory battles, specific project news, that's really the key, isn't it, for anyone trying to navigate this space?
Couldn't agree more. It's complex, it's fast-moving, and you need to look at all the different pieces, macro, regulation, tech innovation, to really get a sense of what's driving things.
Well, for more of those pieces and deeper analysis, we definitely encourage everyone listening to head over to niftynoon.com. You can find way more detail there and subscribe to our daily newsletter to stay right on top of
Yeah,
things.
definitely check it out.
For now, thank you so much for joining us on this deep dive into the ever-eventful world of crypto.
Thanks for listening.